Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
Welcome to the Velocity of Money. You are listening to KFNX 1100, and we have once again one of my favorite guests, Mr. Brett Fallon. Brett, thanks for being here.
Hey, thanks for having me.
Brett Fallon has brought with him some updates on the loan modification, on the economy and how things are changing these days. And we have some, he brought some great information in to discuss with you. We talk about all these different things in the economy, and look, let's be honest, there are a lot of problems out there. I don't think anybody can dispute that. The jobless market, or the unemployment rate is the highest it's been in many years. It's devastating out there with Fannie Mae, Freddie Mac, AIG being taken over by the government, Lehman Brothers, Bear, WAMU, Countrywide, all gone. Banks and insurance companies getting their bailouts. The auto industry is going to be the next one to get a bailout. We're already working on our second stimulus package. 95% of the people, according to Barack Obama, going to be getting President-elect Obama, going to be getting a tax cut coming soon. Where is all of the money for all of these things going to come from? It just seems to be a downward spiral. Brett's got some great insight on this that he wants to talk about, and some more, unfortunately, a little bit more dismal news that of late that he needs to talk about. Just want you to know, before you drive off a cliff, there is light at the end of the tunnel, and we are going to talk about that. So, Brett, why don't you share a little information, if you could?
Yeah, I'd be happy to. You mentioned a couple of things in your opening comments, and one was about the market seems to be anticipating bad news and is certainly pricing it in. There was another pretty significant down day on Wall Street again today. Most of that down day was attributed to two things. Retailers such as Best Buy and Macy's came out with their projections for consumer spending. Best Buy actually said something to the effect of it's the lowest level of consumer spending they've ever experienced in the history of their business.
And Best Buy is one of the ones that's actually going to stick it out.
And Best Buy hopefully will be one of the ones that stick it out, as we know Circuit City's filing for bankruptcy. The other thing that you mentioned was the jobless claims. You're right. The number has definitely increased. The NEBR is the government agency that is responsible for reporting when a recession begins and when it ends. They call it.
Okay.
They officially have not yet called one, but I think every reasonable person believes that we've been in one and probably have been in one for some time already.
Right. Supposedly there's some technical factor that says this is a recession. That doesn't mean that we flip the switches and boom, here we are at a recession, right?
That is absolutely right. And, you know, in hindsight is how they judge that time of when it started and when it comes to an end. And it's usually, you know, several months after the fact, but it remains to be seen. We believe we're in a recession, but we're going to talk about a couple of things that people are feeling this economic crunch, what they can do about it, specifically as it's regarding their home ownership and their mortgaging. A couple of interesting things that came out. Secretary of the Treasury Hank Paulson today made an announcement this morning regarding a change in the government's, they call it a rescue plan, others call it a bailout plan.
That's the $700 billion thing, right?
That is the $700 billion thing, yes.
That most people are not happy with.
Yeah, and apparently Wall Street really is unhappy with the changes that took place, pretty significant. The idea at the time this legislation was discussed in Congress and ultimately signed by President Bush into law was to use the funds to buy the bad assets, mortgage-backed assets, from banks and lending institutions. They changed that and recanted that today. Today they announced that Hank Paulson specifically announced that they are no longer going to be using those funds that way. The current plan calls for $250 billion of the $700 billion to be used to buy stock of those banks and financial institutions.
Let me question here for you, Mr. Fallon. Does Hank Paulson, does he need to get approval for this?
One of the things that's been discussed all week long was the fact that as this legislation was passed and went through, that he has sole power to make these types of decisions without the benefit of it being discussed through Congress and those traditional channels. So he is currently the most powerful man in the world.
He's got the whole paycheck, or the whole checking account to himself to decide what is the best distribution of those funds.
It certainly appears that way, and apparently he changed his mind and announced it today.
Well, you know, we have, in the past, we've talked a lot about loan modifications, and I'll tell you, since the first time we started talking about loan modifications, the whole space has changed. Everything about loan modifications, from our very first broadcast talking about it, we don't talk about it every week, but we talk about it a lot, but it has changed so much. When we started talking about this, anybody that had a significant hardship or financial hardship or had one of these toxic mortgages that had adjusted would be able to potentially qualify for a loan modification. These things have changed. It isn't all of a sudden not across the board. Brett, you made a comment earlier about the people are concerned that once these servicers do actually do these loan modifications, they could be subject to lawsuits, right?
Yeah, it's amazing how quickly things have changed over the course of the last couple of weeks. I mean, it seems, you know, this information and this news is changing almost hour by hour at this point. One of the things that came out regarding this mortgage remodification or modification program is from Barney Frank. Congress should act to restructure the servicing of home mortgages. So the idea is that they're catching on to something that you and your team at Velocity Financial were ahead of the curve on in terms of loan modifications, knowing that those rules for a hardship and being able to demonstrate why you're entitled to one have definitely changed. Now it's more of a situation of, in order to stop foreclosures, in order to stop the problems associated with this mass foreclosure marketplace, modifications are being talked about amongst the banks now. Barney Frank's comments today, he stressed these voluntary inducements to get these private entities to help protect homeowners from this foreclosure. The government has fallen short, and Hank Paulson has fallen short of putting their weight behind this concept, although I personally believe that that is the next evolution of this. Well, loan modifications are a critical step for people that are feeling this economic crisis, for people that are wanting to stay in a home, for people that need this type of assistance. The idea is you have a short window of opportunity here before something else significant changes where you may no longer be entitled to. You heard a group, and you know this, we talked about it. Citigroup came out and made the announcement that they were going to suspend their pursuit of foreclosures in areas of the country that have the highest unemployment rate.
Right.
That was the caveat. So we'll see how big the scope of that gets, but the whole idea is for you as a mortgage owner, as a homeowner with a mortgage, if you need to establish a modification to your existing loan in order to have more favorable terms and interest, a more favorable monthly payment, a way to keep that home, you have to look at this option. You have to look at this option soon.
Yeah, you know, and I appreciate you saying that. One of the things that Citi announced that they were going to be doing was they were going to be giving people these teaser rates of 1%. Look, anybody with a brain can realize that that is ludicrous. What got us into this place, this situation in the first place, was big, huge banks just like that one that are giving people toxic mortgages with fake interest rates in the beginning and pick your own payment, do whatever the heck you want to. Well, that's exactly what they're trying to do again. Essentially, what they're talking about is giving people a short window of a very low interest rate, but they're going to be back in the same situation in the future. That's why the loan modifications that we do, that we hire on your behalf, of course, the national network of attorneys that we use, we go for the throat. We're not looking to get you a 1% interest rate for the next 12 months. We're looking to get you a lifelong or for the term of the loan if possible, the very lowest interest rate available, and fix it, extend the term so you can actually sustain that payment well beyond the short term of if you should happen to be one of these people that's falling prey to all of the economic woes. I want to real quick give the information out. The website is modificationhotline.com. We've got two websites, modificationhotline.com, and then there's a 1-800 number. It's actually 1-888-MOD-INFO. That's 1-888-MODINFO. 1-888-663-4636. One thing I want to point out before we have to go to a break, Wayne's telling me that if you know of anyone out there that has a GMAC mortgage, whether it be a GMAC first mortgage or second mortgage, you have got to tune in to the second segment. You're not going to believe this scam that's out there going against people with these loans. So stay tuned to the Velocity of Money and KFNX, and we'll be back with you in just a few moments.